the US market in particular is just so huge that you don't need too much money to be moved away from the US market into other economies to make a material shift on the stock market. So if there is a opinion that the Fed won't cut rates in September and it moves to December, and if people believe that the extra premium that the US has is too much and we need to cut that down, where will that money go? With regards to India and China, at the moment there seems to be more catalyst for that money to move towards China. There is a lot more positive stimulus coming through. There's a lot more coordination, at least with regards to trade and what we're seeing with NVIDIA, as you highlighted earlier on, as the proxy between US and China on the tech. There is a lot of also positive numbers coming out of the Chinese economy, which I think is constructive for investors to say, okay, we're going to look at some of the marginal money and move there. The key is, will we see Chinese investors, China buying back into China? That is the long-term trade instead of just a tactical trade. At the moment, it still feels a bit more tactical than a lot more China money going into China, but we will see.
Well, a lot of, it's actually a big chunk of money actually left China. One tech company's leadership actually took some money out of China. I think that is getting some attention from the authorities there. But are you getting a lot of pushback at the moment in terms of convincing your investors to park their money into Chinese assets at the moment, or is it getting any better?
I think it's getting better. We've started the beginning of the year with diversifying out of the US. When we're saying diversifying out, so if clients had 85%, 90% in the US, which some clients did, we've really been saying it's time to move into other economies, Japan, China, Southeast Asia. We like the space. You want to start shifting that way. The dollar's been on quite a crazy road, but China itself, I was there last week, feels like there's a different energy. It's starting to pick up again. So we think the case is getting stronger. It is not, people aren't rushing there, but it's definitely increasing.
New energy. This is interesting because just yesterday we were doing a deep dive into this whole idea of involution, right? Which I guess you can describe it a lot of ways. I like to think of it as simply as, look, it's like China. It's like the Hunger Games in China, right? Too much of a good thing. Do they want competition? Of course they do, but not to the detriment of companies and also salaries and livelihoods. And I think layered on top of this is the key risk. I mean, they've been through something like this before, several times over, right? Solar panels, the whole bit, right? This time around, though, what they're facing is with this whole overcapacity issue and having to export it out, they are facing basically a blowback from other countries, tariffs, right? Which is what makes this whole involution thing so much more, I think, important for them to deal with.
And for sure, I mean, there's going to be. I think they're almost a victim of their own success. I went when I was there to the AI Expo, the Smart Factories Expo, and it was fascinating the scale that China can do it. I mean, it's just incredible. No one else can do that scale. So they've been able to create this, fantastic asset of being able to do things at scale and proper. And some countries are going to push back, and we're at a period of pushing back. But realistically, not many countries can step in and do the scale that China has.
Are they going to pay 15% more for NVIDIA and AMD chips?
Look, I think this is a negotiation tactic. I think this is something that's going to be back and forth, and there will be some in between. It puts pressure on US stocks as well, because if they're agreeing to paying a certain percentage of your margin to the government, does this mean that the extra premium that US stocks experience, that needs to come down? So then it starts playing a whole bunch of movements. So to me, this is a negotiating tactic that we've seen before. This is where it's going to get escalated, it's going to get to a point, and then it's going to get washed down, and it's going to find something that works. But that's going to take a while for us to get there.
So how do you stay nimble when it comes to investing in China? And, we actually had a guest on yesterday who was saying something similar, that you got to be very selective in China. What are some of the exposures that you would recommend in China?
Well, China, the focus, we believe, is largely aligning with the government policy. So where is the government driving most of its energy? Tech is clearly one of the spaces that's getting a lot. Energy, again, is there. Defense, agriculture. Now, agriculture as an index is really struggling, but we're seeing a lot of agri-tech doing very well. When we're looking at the experts I talked about earlier on, as robotics, as factory automation, I think there is still a lot of combining AI with technology and giving the machines proper brains, that's really going to come out of China. So we think there's a lot of opportunities to dive into the specifics. We have a lot of analysts on the ground looking for those specifics, and it's just to kind of really squeeze out where the longer-term opportunities are. Buying the broader index, that can be a tactical play, that can be using things like structured products to make it attractive, but for buy and hold in China, it is finding those themes that are supported by the government. Then you can hold them for a much longer time.
And I love that you mentioned robotics, because we've got a robotics guest coming up later on in the show as well. And, this is really the idea that I wanted to sort of pose to our viewers and to you as well, that China may not be leading when it comes to AI, chips and software technologies and robotics just yet. But they're so embedded. The Chinese companies are so embedded in robotics supply chains that maybe those are the names that you need to pay attention to, because sure, American robotics companies might be coming up with the software and very well-trained robots, but all the parts that come from China. Yet another moment of taco, perhaps? What do you think?
Yeah, well, I think to your point, yes, maybe some of the models from the West are PhD level models, but you've actually seen a shift even from OpenAI recently, talking about slightly less intelligent models that can be put onto systems themselves. And you don't really need a PhD if you're going to be restructuring your supply chain within a factory. You need, you need specialists in the specific functions. That means not someone that can solve everything, but specialists in the function. So now you can take the robots and you can take smaller AI models and you can make some really, really interesting, innovations there. So I think robotics with these smaller sized models that can really focus in, that's where the real practicality is. And I think China's fantastic at making things practical, scalable, and we're going to see a lot more over the next few years.
I mean, this is the thing, right, Gareth? Let's say the end goal is humanoids, right? That is still, practically speaking, several years away, I think, right? To make them safe and scalable for, say, home use or even hospitals. But where China could obviously apply AI is, I mean, they've already got this huge installed base in terms of industrial robotics, right? They AI that, boom, you're off to the races, right?
Absolutely. And if you've got a specialist welder that can solve welding right across the screen, that machine can then do so many more functions. It can be used. Maybe you could have factories that start getting multi-purpose because AI can adopt. There's so many different ways of giving brains to the existing robots instead of trying to have one humanoid that can do everything.